Talk about number one category, which is trading securities. So we have the example here. I just want you to pause the video and then we solve it together. So Apple Corporation is purchasing 5,000 stocks of Intel Corporation and at the price of 20. So if this amount is not given, you can also find out that how, because they are purchasing 5,000 shares and each share costs 20. So answer is 100,000, right? So what will be the entry? Entry would be, because trading securities is our current asset, and asset increase, debit, and asset decrease, credit, in which we talk about this is cash. So trading securities to cash, right? So assume that on June 30 you received a dividend of 4,000 from Intel Corporation and you record it as dividend revenue. So whatever is the revenue, when revenue increase, it's credit. So revenue, and which kind of revenue we classify as dividend revenue. You receive cash, right? Then cash increase, debit, 4,000 to 4,000. Let me just remove it and see the entry here. Here it is, right? Cash to dividend revenue, right? So in previous example, what we talk about, that you receive the revenue dividend and that's it. So question arises, you purchase the stock in our previous example for $20 and you purchase 5,000 shares, you invest 100,000, right? What if you didn't sell your shares and the price of the share increased? After 2 days the price is now 22. When you multiply this 5,000 share with 22, the answer gonna be 22 multiplied by 5,000. Answer is 110,000. So here is the value. Does your investment increased or your return or increase? Answer is yes. If your return is increased, then should you record it or not, right? And what you name that one, because you still did not sell it, you are keeping with yourself but your value increased, right? So we call this unrealized gain or losses. If you have loss, then losses. If you have gain. So in that case, you keeping this shares and the share value increased from 20 to 22, making your investment 10,000. So this transaction seems that you get $10,000 as a profit, right? But this profit is not the actual profit in your pocket. This is when you sell it. You did not sell it, we call this unrealized gain. If you sell it and you receive in cash this 110,000, then we call this, yes, this is called realized gain or losses. So let me just remove it and talk about. So here it is. So if the fair value has increased, we have unrealized gain. Like we invest into the market price and the value increased to 22. We multiply with 5,000. Answer is, so we have a gain of 10,000, but we did not realize it, so we call this unrealized gain. What is the unrealized loss? If that value become 18, right? Then what happened? So when you multiply 5,000 with 18, answer would be 90,000, which means you purchase it for 100,000, and your loss is, let me just find it out, 18 multiplied by 5,000, yes, 90,000. So in that case, right now the value is 90,000, you purchase it for 100,000, and there is a 10,000 loss. But still you did not sell this 5,000 share, right? If you did not sell it, we call this unrealized loss. Okay, let's move further. So what is the treatment for this unrealized gain or loss? So let's talk about that. So just pause the video, try to read this example. So that is the continuation of our Apple Incorporation example. So the Apple Corporation fiscal year end on 27th of December. On this date, the fair value of the stock is 110,000. Adjust investment in Intel securities to current fair value with the following entry, right? So here our value increased. So we have, when we purchased it, we already had this entry, right? That trading securities to cash, but now the value has increased. So what we have to do here, we have to increase the value. We will say that because our trading value or trading securities has increased its value, so trading securities to, can we call it cash or something? Because no cash is involved, it means our value is increased, and we call this unrealized gain. The value is 10,000, right? So let's see that. Let me just remove this entry and let's see a very nicely compiled entry here, right? So question arises, why we are not entering 110,000? Why only 10,000? Because when we purchased that one, we entry was investment in trading securities to cash, 100,000, right? So this is debit, this is also debit, this totaled on the balance sheet, right? Because this is asset. And remember, the unrealized gain on trading securities is income statement item. So this will not go to balance sheet, this will go to rather income statement, and this will go to balance sheet, right? And when this will go to balance sheet, it will add on existing trading securities, and the balance sheet, its amount will be 110,000, right? So how we add it? Like here, when we post it here, the balance would be in ledger or T account in trading security would be 110,000, and 10,000 will gonna be a gain. Sorry, not again, gain. Okay, now the next example, that is on September 26, 2015, means after 1 year, its fiscal year, the fair value of the Intel stock is 105,000, which means we are talking about next year. So in preparation of 2015 balance sheet, what's going on, right? So right now our trading securities balance shows that it is 110,000, right? But right now the value is 105,000. It means we have 5,000 loss. And this loss, did we sell it? No. It means we have to realize it as unrealized. So entry would be, we need to decrease the trading securities. Entry would be that the trading securities would be credited, because asset decrease, credit, and loss is unrealized loss increase. We call this debit because it's kind of an expense, right? Unrealized loss 5,000 to investment in securities 5,000. Regarding the realized loss, it means you actually sell that investment. So you have a gain and you have a loss. So if we have a realized gain, if the sale price is greater than the carrying value is what is in your balance sheet amount, right? We have a realized gain. If it is less than that, then we have a realized loss. See the example here. So suppose Apple Corporation sells its Intel stocks on 19/2016 for 107,000, right? Apple Incorporation makes the following entry. What? Because you sell it, you receive cash, right? On our previous example, we have a loss, unrealized loss. So our carrying value was 105,000, and since we sell it at 2,000 and higher value, right? So on the balance sheet, we decrease our trading with 105,000, but we receive cash of 107,000. So if there is a difference, there is a 2,000 difference. And what is that? We call this realized gain, or you can just say the gain on sale of the asset of trading securities, right? So if you write down the gain, it's automatically means that we are talking about realized, but for unrealized you have to mention unrealized. Okay,